Welcome back everyone to another video, and once again daily uploads, all because of you and your support. So if you do respect that, go ahead and click that big red button, the subscribe button. Also hit that little notification bell as well, that way you're notified every single time that I do make a new video. If you are brand new here, go ahead and do that for me. So in recent days we have learned that President Trump has tested positive for the virus, for COVID-19, and in the last video we took a look at how that could potentially impact the future of the next stimulus package and your next stimulus check. If you haven't seen that video, the link will be down below in the description. I'll link it down there. But in this video, what I want to do now is take a look at how specifically this diagnosis will actually impact the financial markets and the stock market here in the US and abroad. If somehow you've been living under a rock and you're not already aware, Trump and Melania, the First Lady, did test positive for the virus at 12:54 a.m. Eastern Standard Time. Trump had tweeted, "Tonight at FLOTUS and I tested positive for COVID-19. We will begin our quarantine and recovery process immediately. We will get through this together." Interestingly, it garnered 1.8 million likes, being Trump's most liked tweet in history. So first we'll take a look at how the market actually did perform this past Friday when the world woke up to the news and it sent shockwaves around the globe. And then we'll take a look at how the market could perform prospectively. We'll take a look at what some Wall Street analysts are saying, some Wall Street vets, and what they think will happen to the market. So there's no doubt this will promote and inject even more uncertainty and turmoil into this country. And when you pair that up with the markets, you'll see a lot more volatility. According to Chief Global Strategist at Principal Global Investors, Seema Shah is saying that this will boost volatility, but investors should refrain from knee-jerk portfolio changes. Essentially, this chief strategist is saying that this will add fresh uncertainty into these United States that are already in the midst of a presidential election. And what we're going to be seeing is constant headlines on Trump's conditions that will either be pessimistic or optimistic, and that could drive some very choppy trading in the markets. Shah continued to say that the market will likely course correct after the election, saying, quote, "Volatility is up, but does that mean you need to change your allocations? Probably not. It's probably better to look away from the screen for the next month or so." And then went on to say, quote, "Don't change any of your allocations because things will revert to normal after a couple of months." And when it comes to the election, we can actually envision an even closer, tighter presidential race. For example, when UK Prime Minister Boris Johnson contracted the virus back in March, it increased sympathy and patriotism, and people started to rally around their world leader. So what we could see is a lot of these undecided voters ultimately end up casting these sympathy votes and end up swinging towards the president. But at the same time, the Democratic nominee Joe Biden does still hold a strong lead in most national polls, and now virtually every swing state he is leading. And so Shah did go on to say that the diagnosis probably does not change the election's outlook. And she added, quote, "This isn't necessarily going to move the needle too much, but it does move the needle in terms of volatility. If Biden and Trump been neck and neck in the polls, then yes, this would be a market moving event because it could shift it one way or the other." And this was highlighted during Friday's trading day right before the weekend started. We saw the market immediately crash hundreds of points due to the diagnosis, and the markets were in tremendous uncertainty. And then they actually ended up becoming positive for the day after investors sort of shook off this news and realized it perhaps wouldn't have as much of an impact. And then finally the market did come and drift a little bit downwards, and it ended up closing about half a percentage point down, or 134 points down. And despite that, October could be a rough month for the markets. What we're seeing is the Bureau of Labor Statistics Friday report pointed to a continued slowing of U.S. economic recovery, and major banks have also recently revised their growth estimates lower, citing dwindling odds of a near-term stimulus deal. But history does show us that markets do tend to perform negatively as election day starts to loom, and that's what we saw in the 2016 presidential race. And when it came to global markets, there wasn't too much dramatic movement. When it came to the Pan-European Stoxx 600 index, it notched a slim gain of just 0.1% despite opening in negative territory, and then oil and gas and retail stocks slid 0.4% to lead losses, while construction and material stocks bucked the trend to climb 1.5%. And then the Spanish construction giant ACS surged more than 25%, but this was after revealing that French rival Vinci has submitted a bid to buy its construction business Cobra for 2.8 billion euros, or $3.3 billion US. And then according to Fundstrat's Tom Lee, he actually believes that this will be good for the financial financial markets. This is because he believes that this could actually ultimately lead to more mask wearing and social distancing. The skeptics, who could be mostly found on Trump's base, he actually believes that this should actually increase compliance of mask wearing, saying, quote, "This would help contain the recent surge in cases and might even push further down the path of cases." Overall, analysts are expressing the same sentiment of just staying the course and don't panic. According to Seema Shah, investors who take defensive positions now could miss out on the typical rebound seen as election uncertainty does die down, and Trump contracting the virus is just short-term noise that jolts asset prices, but, quote, "there is nothing which should change the market dynamic seen in past election cycles." So as usual, if you are a more risk-averse investor, make sure that your portfolio is diversified and you're playing the long-term game and not paying attention to any bumps in the market. And if anything, that's what this pandemic has taught us. It's stunning to see how fast the market rebounded ever since that March 23rd low. The market made a stunning recovery, and in fact, people became very wealthy because of this pandemic. Stock prices were at vast discounts you could have scooped up at historically low prices and made a boatload of cash. There's nothing to panic about, and right after the election is over, towards the new year, we'll probably be out of the woods. But I do hope you got value out of this video. If you did, be sure that you give the video a big thumbs up, smash the like button, just help with that YouTube algorithm. YouTube will push the video out to even more people, so I do appreciate when you do that. And again, if you are brand new to this channel, go ahead and click that big red button. Also hit that little notification bell as well. I upload videos now every single day covering business, finance, investing, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. I also do stimulus package and stimulus check updates. So if you're interested in any of those topics, again, click that big red button, hit that little notification bell as well. But I look forward to seeing you in the next video.